to A Well-Designed Business. My name is Luann Nigara, and I'm so glad you found this podcast. Together with my husband Vince and our partner Bill, we have grown our company Window Works from the ground up. So I know and I understand the challenges you face in running your interior design business. I also know that your talent alone isn't enough to ensure your success. So on this podcast, we talk about strategies and practical steps to help you grow your business. But make no mistake about it, we have our share of fun here too, mixed in with those aha moments that I love so much. This isn't fluff. Nobody has time for that. Whether you are a new interior designer or a seasoned designer, I am here to help you create and to manage the kind of interior design firm that you dream of. It's straight talk and it's action. Are you ready? Let's get started. Hi, welcome to A Well-Designed Business. I am delighted to tell you that our gurus of all things money are joining us today. That's right, Michele Williams, Peter Lang, and Kim Merlitti are here to share their insider tips on what we need to do right now to get our year-end financials in order and how to plan for a profitable new year. If you are a longtime listener, you know that each of these financial wizards have written chapters in my A Well-Designed Business, the Power Talk Friday Experts, Volumes 1 and 2, which if you haven't gotten these books yet, I highly suggest you head over to luannigara.com/book and grab your copies. The information in these two volumes will help you tighten up your business in ways that you cannot imagine. So, in addition to being co-authors of mine, these powerhouses have been on the show many, many times each, and every show is absolutely packed with solid, easy to understand, practical advice for understanding and knowing your numbers. All of their episodes will be listed in the show notes. Before we get to these guys, I just want to say I am coming to Philly. Yes, on December 8th, 2021, I will be giving a presentation to the IFDA chapter and would love for you to come join us. For RSVP and event details, go to my website under the events tab. All right, looking forward to sharing this conversation with you. Hey, I am so glad that the three of you are here. And I would just say to you that if we had one more person here, I would have four of my favorite money people on the phone at the same time. But I've got three of them. Hi, Michele. Hi, Peter. Hi, Kim. How are you?
Hey, Luann, it's Michele. I'm doing great and glad to be here.
I know. It's been so long since I've talked to you. I'm so happy to connect with you again. Hey, Pete. How are you?
Good, Luann. How are you?
I'm good. The designer CPA. So glad to have you in the house. And hey, Kim, how are you?
Hey, Luann. I'm good. This is Kim.
Great. Listen, of course, me and Kim and Peter are in much more contact because of Luann University, but this is a treat to have you back with us, Michele. It's been a long time since you've been on my podcast, so really happy to have you back. And that fourth person, of course, is the Vin Man. So if we had the Vin Man here, we've had all my favorite money people. All right, guys. So you are my go-to experts when it comes to all things money and running the money of our business. And Kim actually reached out to me with an excellent idea. And she said, why don't you get your money gurus together, Luann, and why don't we help everyone prepare for the end of 2021 from a financial standpoint and get ready prepare for the end of it and then prepare for 2022 as we go on. So really excited for this conversation because this is going to be a notebook and pen conversation. I'm 100% certain of it. Where do we want to start? I think we want to start in the weeds, right, you guys? We talked about it a little bit, and there are some very specific in the weeds activities that we have to do from a financial standpoint before we can start to think about wrapping the books up for the year and for projecting and financial planning for the following year. Do I understand this right from you guys?
Luann, it's Michele. I'd like to say I think there's one place we need to start before we go in the weeds now that I've thought about it.
Okay.
And I'm just going to throw it out there. It's 2 seconds. And then I think we go to the weeds. And the first place I think we have to start is getting the right mindset around doing all of this work, because this is overwhelming sometimes. There are a lot of numbers, a lot of moving pieces and parts. All of the really nitty-gritty details that Kimberly and Peter and I later might talk about. I think we have to create a space and give ourselves some, I talk about it all the time, pour grace on yourself. We need to give ourselves some space and some clarity of thinking and kind of block the email, block the phone, so that we can take the time to really dig in to do some of this work or to direct the work to be done. I just find that tends to set us up in the best way possible.
Michelle, I want to just thank you for saying that and for considering it, because for people unlike you three, doing the books and doing the numbers, what happens is it tends to be something that can get kicked to the curb. And then when you finally do it, you're like, that wasn't so bad. Why did I avoid that for 2 days, 2 weeks, 2 months, or 2 years, right? We've all had conversations, all four of us have had conversations with colleagues who have said to us, I know I should do it, but I don't do it. And then it just gets to be this big, gnarly animal, and then we don't want to do it. And until we break that pattern, and to your point, until we reframe that mindset of understanding, if you do it and you learn it and you do it on the regular, it doesn't have that power over us anymore, right?
Right.
Yeah. Okay. Well, thank you. And I appreciate that. So, big girl, big boy panties. We're going to do our money. Get over it. Right.
Hey, I tell my team, put your Spanx on. I think this is past big girl panties. Get the Spanx.
That's a great line. Oh my goodness. We should have all of our male colleagues put Spanx on just once. So
they do make male Spanx. They do make them.
Oh, they do.
Oh,
isn't
yes.
That so fun. I don't know anyone who wears them though.
Me either, except for her husband, Jesse, but they do make them.
Awesome. Okay. So I think we talked about that. Kim, you would start us in the weeds. Get us a couple of activities that we need to do in the weeds before we can start analyzing and projecting.
Are you guys ready for this? Because this can be intense. No, just kidding. I'll try to make it fun. So what I do every year at KMM Consulting is I break down step by step, starting in October through April the next year, what you have to do. And the number one thing, and I'm sure Peter can thumbs up on this, is the balance sheet cleanup. Now, people are like, oh my God, I've never looked at my balance sheet. Don't fret. Let's break it down into sections. And that's what we're all here to kind of get into. And that's where the grassroots part come in. Because I'm sure people out there are like, balance sheet, there's nothing grassroots about the balance sheet. I have a lot of clients that I take on that don't even know how to read it. So it's important to understand the components. So let's just go over general and then we'll go even deeper. We've got your assets, which are all your cash accounts. Okay. And then we've got your assets, your fixed assets, which if there's a depreciation component to that, you want to reconcile your petty cash, all your cash accounts, make sure all that's done through the end of the year. And again, if you're starting from behind, not to worry anybody, but you better start now and just chip away at it, because December 31st will be here before you know it, as scary as that sounds. And then you're going to look at your liabilities. Have you booked your interest of your loans? Especially with all those idle loans that people have been taking. Some people have been paying interest on those, and you need to understand how that's booked. You don't need to do it yourself, but you need to probably talk to your accounting professional, your tax professional, your accountant, your bookkeeper. Not that I need to sell myself, but if any of those people don't give you the answer you need, you're more than welcome to sign up and talk to me. I'll break it down into non-intimidating terminology. And then you're going to look at make sure your credit cards are balanced, especially those that the statement ends in the middle of the month. That's going to be important. Again, we talked about idle loans, any additional long-term liabilities, such as long-term loans, an SBA loan. Peter's going to go over the PPP and how to handle that. And then your equity section. Now, most people are like, I don't even understand what you're talking about, Kim. But again, I want you to turn to your accounting professionals and just start the dialogue and the questions to them. If you start to get answers you don't understand, you probably need to, unfortunately, go to another professional. I would suggest deciding to get a CPA now instead of in January or February. Some people are like, I don't have a tax professional. you need to start looking now for one of those. And again, I'm not sure about Peter, but maybe he can give us some insight on how to do that. But anyway, the equity section, one thing that's really important, again, Peter will probably nod his head, is I don't know how many times I've heard from my CPAs and they come to me and they go, Kimberly, your retained earnings doesn't match last year. If you're filing as a LLC or an S Corp, this is really important. And that sounds like terminology that you're not familiar with. Again, you want to go to your accounting people. That is a whole, that balance sheet needs to be in good working order before you close out the year. If you don't do that, you're going to find yourself playing catch up. It's not the end of the world. Like I tell all my clients, don't lose sleep over this. That's why I send a checklist and I say, hey, everybody, this is what you should be doing. And then I schedule time with my clients and we kind of go through everything. We also go through the cash and we go through the new budgets that we've got going on. So the balance sheet is probably where you want to start your focus and break it down by those sections. And again, if your CPA or tax professional is not giving you an answer you understand, don't sit there and just nod your head. Ask them. Right. I mean, they're the professionals, so you need to ask them questions. Just because they're using terms you don't understand doesn't mean you need to understand them. Talk to me like I'm not a tax professional. That'll get them in check.
Right.
So, yeah.
Well, that's why we have Peter Lang, because he doesn't ever do that. So let me ask a question. Just saying balance sheet cleanup. So I understand the components of the balance sheet. The assets include the cash, the fixed, the petty cash. The liabilities include our loans, our credit cards, our long-term, SBA and PP loans, and our equity and all of that thing. But what does that mean, clean it up? Do we have things that maybe our bookkeeper has been putting in certain columns and we're reviewing to see if they're in the right columns? What does it mean to clean it up?
And well, it means something different pretty much for every account. But if you take it in those sections, like the assets, if it's a fluid cash account, it needs to be reconciled. If it's a fixed asset, it needs to be depreciated if that's how you've been treating it in the past. If it's a liability, like a credit card or a loan, it all needs to be reconciled by the end of the year. So when I say reconciled, I don't mean accepting transactions through online banking. I mean, you physically use your bank statement and you go into your reconciliation tool in your softwares and you reconcile it with the bank statement. A lot of people misunderstand that, especially with all the easy functions QuickBooks has in their software. And then in the equity section, I think my best piece of advice is get someone that understands the equity section to help you with it if you're having trouble. It's not the easiest thing to understand.
Okay.
So, yeah. There's some things you just need to turn to a professional for.
Okay.
Yeah.
Okay. And so, Peter or Michelle, one of you, when you're working with your clients and you're overseeing what they're doing, is this typically something that, like Kim is suggesting that this happen? Is this something that somebody would task their bookkeeper with doing and then they verify it and then the CPA is the next check? Or is this something that the principal, the CEO of the company needs to do? Like, is there a difference here between regular monthly bookkeeping and what Kim is talking about here in this balance sheet cleanup?
Yeah, I mean, I can kind of add some points to it because there's a couple of accounts that I think about because I only work with interior designers. If you're on the accrual basis or if you're using a software that has your design, project management as well as your accounting management in the same one, you're going to have client deposits in your liability section. You're going to have vendor deposits in your asset section. You need to make sure that you have someone on your team or an accountant, if you have one that does this, that also works with you to make sure that those numbers are accurate. Because every tax accountant or almost every tax accountant that you talk to that doesn't specialize in the design industry is going to just ask for a P&L if they're doing a tax projection. But the balance sheet is more important than the P&L. I can confidently say that because if your detailed project information isn't up to date. And what I mean by that is if you have received a bunch of retainers or money still on proposal for projects that are done but haven't been cleaned up in a sense that it's been invoiced and cleaned up and cleared out of those accounts, your P&L isn't accurate, and therefore that tax projection isn't accurate. So we look at the balance sheet first and make sure all of those things. So Kim's right. The first thing I look at is has your bank account and your credit cards been reconciled? And absolutely, Kim's absolutely right. Like, I don't mean like, yeah, it looks like the transactions have been put in all the way to today's date. I mean, like, it says right here it hasn't been reconciled, and I don't care what anyone says, it hasn't been reconciled. And then just to interject on the equity section, as far as those, when a CPA or a tax preparer is saying, hey, that equity section or that retained earnings section isn't accurate, if you have that situation, or if somebody says that to you, maybe you have a new tax preparer or whatever, you can reach out to the person who did file your tax return and ask them for just say, I need the tax entries or the journal entries in order to update my accounting records so that my accounting records reflect and are accurate compared to the prior year tax return. Because once that's done, that's kind of, as a tax accountant, as a CPA, that's what we learn. Like, that's the first thing we look at. And if prior year retained earnings or that equity section doesn't look right, you don't go any further because, again, what Kim said, the QuickBooks can, because of its ease of use, you, without even knowing it, you could be adding things to prior years that should be in current years and whatever. So that's the trick that tax accountants will use to ensure that everything's accurate. And if it's not, you shouldn't be going any further.
Okay. And Michele, how about you? Do you have any thoughts to add in this section here, building on or adding to what these guys are saying?
Sure. So the first I would say is I totally agree with what both of them have said. So, I'm sure it goes without saying, but it is nice to hear three financial people say yes. The piece that I always get is, I think that because we talk about that income statement so much, or the P&L so much, where you're watching daily transactions, if you will, I think the balance sheet doesn't get the love that it needs. I think we can all agree with that. But financial people, bankers, they're looking at that balance sheet. And I can't tell you how many, it is rare, I'll put it this way. It is rare that I get a new client that has a clean balance sheet. Rare. And even little things like, I'll say, wow, you owe $75,000 to the state for sales tax. No, I don't. I've paid all that. Not based on the balance sheet. Or I'll say, wow, you really have $150,000 on an Amex that you have to pay? No, that's paid off. Not on the balance sheet. And so when we talk about cleaning it up, to me, the way I like to explain it is you're making it be a perfect representation of your financial state at that moment. Right. Okay. And when you ask the question, who does it? It is a combination. Sometimes bookkeepers and accountants, they're going to have to ask the business owner, tell me about this. There may be things that were purchased that they wrote off as an expense that should have been an asset of the company, or vice versa. There is even things like inventory, like that could be a huge piece sitting on a balance sheet. And if they've not redone inventory or don't have an inventory system, that can cause a problem. So it definitely needs a lot of care and attention. And I don't think that most businesses give it that.
So when you're mentioning things like, do you have inventory? When is the last time it's been counted? Does this match the amount on the balance sheet? So we're talking about, we know that we have colleagues out there that have storefronts, right? And maybe they've purchased furniture at High Point or different markets and they put it in, and sometimes they sell it off the floor and sometimes they don't, or something. Is that what we're talking about, that type of inventory?
Yes.
Okay. And that
or even
changes.
In a storage unit. Like if they have inventory on that balance
like
sheet
and they've got it or something.
Yes, or those that are like buying. Sometimes the designers will buy, let's say, some things in bulk, or things that they know that they will have a client who loves, and then they store them until they can sell them, whether they have a storefront or not. And so it's just important. to look at that the same way you look at all of your other retainers or anything else that you have. Am I accounting for everything happening in my business?
Mm-hmm. Because in June, we might have sold, a sofa and 2 chairs, but to your point with the Amex, it didn't make it to telling the balance sheet that's no longer there. Okay, so this is what we're doing. So our ideal is to be doing it all through the year, but to each of you, your point is when we're getting our books ready at the end of the year, the first thing is to make sure, like Kim said, the balance sheet is cleaned up, and you guys are saying, it's an actual snapshot of the reality of where the business is, not where it was 6 weeks or 6 months or 6 hours ago. It's where it is now. Okay. All right. And then I understand we also want to take a look and pay attention to any installations. Maybe we've got a reveal install that's going to wrap up before the end of the year that is going to have income coming in from it. It's also going to have costs attached going out. Who wants to talk about, what are there any things that we need to be thinking about in that regard specifically?
I can just comment by saying that this is the time of year that when I'm meeting on my quarterly calls with my clients, I'm asking them, okay, I see what you've done so far this year, and I see which projects appear to be open. Now, tell me what you think is going to happen, by the end of the year. Which projects are you going to wrap up, and which projects do you absolutely know you're not going to wrap up by the end of the year? And it's definitely going to be, brought over to 2022. And this is just the year that a lot more is going to be brought over to 2022. So we just want to make sure that we know that, because that will get me a better idea of where the profit and loss is going to be by the end of the year, and it'll give me a better idea of where their taxable income is going to look like for that. So that's very important to kind of just figure out approximately. And as we get closer towards the end of the year, obviously that question gets easier. But having an idea certainly helps.
And is this the type of what we're talking in here, you guys? Is this, say, I took a $250,000 deposit from somebody, and it turns out that I'm only going to be able to install maybe $25,000 worth of that product before the end of the year because of delays or whatever it is. And now, on one hand, the government thinks that I made $225,000, but I haven't because I haven't had a chance to pay for that product yet. Is this that little weird spot that we're talking about and why that's important?
Yes. If you are an accrual basis taxpayer, which if you want to know what you are, you can look on your tax return or ask your tax preparer what you are. If you're cash basis, that's completely different. But most design firms that I work with are on the accrual method, and so that is very important. And usually, if they're on the accrual method, and I can see it even more this year, it's like, okay, this client deposit number, which basically means, wow, look at all of this money. Maybe it's $200,000, $300,000, $400,000, $500,000 that has come in that you've received, but we can defer paying the taxes on it till the following year because the project isn't going to be done or the product isn't going to be delivered until next year.
Okay. And Kim, you have anything to add on that, on any things that you've learned in working with your clients on figuring this out, or is there anything, red lights or alarms that we should think about?
Actually, I was going to address this with Peter, especially on the accrual method. I've got clients that have now projects that have extended past a 2 to 3 year period that normally were 1 to 2 years. And I've gotten pushback from tax people that say I have to close a job and reopen it. This might be a little too much for people to handle this theory, but I wanted to know, Peter, what your thoughts are on that, because I've had to do some finessing with my clients that have huge projects that are lasting 3 to 4 years. The IRS isn't super happy with us that we're keeping it in the balance sheet in the accrual method. Can you respond to that? Because I know it's maybe too complicated, but yeah.
Well, not to get too much in detail, but I would say that in a normal situation where the hope is that by sometime next year, the project is going to be done. I always say, you need to make sure, because this is the project management softwares do a good job of this, where it's like, okay, it's in a proposal, it's in a retainer, therefore it's getting added there in that client deposit account. But sometimes when you close out a PO, or you have a bill that's paid to a vendor through a credit card, the way these programs work, if they're integrated with QuickBooks Online, or if it's done differently, if the process isn't solid, those expenses to the vendor will hit the cost of goods sold section. We need to make sure that we're matching things correctly, which basically means if you're going to defer all that money that you've got because it's not going to be done, then you need to defer all of the expenses associated with the job and not deduct them in the year you pay them out. That's the key. As far as 3-4 year projects, I don't normally deal with people that have that long. I don't have any, I can't say that I have any inside information with the IRS on how they feel. I mean, obviously with the IRS, they want their money right away. But as far as, not to geek out on accounting, but as far as the accounting is concerned, we learned about the matching principle. So I would just say the key is to make sure that all of that money that you're deferring, that you've received, that you're not paying taxes on, you need to make sure that the vendor and the costs of those projects, all of that stuff, you're not expensing right away.
You could see the logic of that, right? As you explain it. So what you're basically saying is, don't say this, and this cost your business X amount of money to reduce your income if you're not going to claim that the things that, the money the profit that you got from those things, even if whether it happened or didn't happen. I hear what you're saying. Right. Yep. Makes sense. And I could see trying to do that, quite frankly. I paid these things this year. Why can't I claim them this year? Right. So, okay. But this is, what it is we're talking about things that we need to have a really good working knowledge of, but it really does sound like so many of these things are then going to be rediscussed and looked over thoroughly with our tax professional. We're not, we're not like, okay, we play one on TV, but
as well as the bookkeeper, because
right.
I have had situations, just to go down that kind of story, where it's like, yeah, okay, those, don't worry about it. We're just going to expense those and we'll drive it down. It's like, I always have to just, because there's been times where I'm like, do these numbers look good for you? Meaning you worked this hard, but it looks like you either made no money, or the real obvious ones will be like, okay, you had 200,000 come into your business this year and your cost of goods sold is 300,000. Now you have a negative 100,000 gross margin before we're even doing operating expenses. What do you think the IRS is going to think about this?
Right. This is not logical, and nobody's buying it, sweetie. Right.
Exactly.
Okay. All right. And then some of the other things in the weeds that you guys put on a list. Oh, yes. Go ahead, Michelle.
Yeah, I was just going to say one thing that I have my clients do that I think can help with kind of the keeping track of everything, because what Kimberly and Peter both said, it actually can be a lot of work to really sit down and think about what's coming in, what's coming out. It's a lot, and especially when it crosses the years. But, I'm going to shout my profit first out here. But if one of the really great things to do is if you have a bank account that holds the money, just like you do for client retainers, but you have one that you only run, let's say, cost of goods through or product purchases through, attached to a credit card only for product purchases, it's a little bit easier to separate out that money and then to be able to allocate it properly, whether it's an expense or not, or what year you're able to just know that the money is sitting there, that it's protected and it's not used for operating, right? And to really have a statement in your firm on when do we recognize revenue? Are we going to recognize it when it happens? Are we recognizing it when the government when do we close the sale? All of those strategies and decision making has to happen before we ever even go into all of the weeds, right? We have to have some strategy and some overarching decision making. And so putting in something like Profit First to separate out the money, to have a separate credit card, is just another tool in a toolbox to help you create the division that you might need to make your decisions more quickly.
So I love this, Michele. So what you're talking about is you actually suggest, of course, we know that you advocate the Profit First, and because of you, I use Profit First as well. Vinny had his own little version that he made up 100 years ago that was so crazily like Profit First. It's weird. Okay. But the thing is, what you're saying is another step further is to have one credit card in your firm that is for product purchases for clients. Like you don't use it for gas, you don't use it for entertainment.
It is only for
Love
cost of goods. It could either be for a product or for services that are considered cost of goods.
Right.
So you have a bank account for those and you have a credit card for those. Therefore, when you pay the credit card, it comes out of that. That way you never borrow money from your clients to run your business. Then you have a bank account for your operating expenses and a credit card for your operating expenses to pay for gas, to do the things that the company needs to do. Now you have actually not commingled funds meant for the client and funds meant for the living and breathing of the company, so that when you determine that you can recognize the revenue from that sale, whatever profit is there gets moved into an operating account, and now you know that you can use that money. That's what you would then see with what Peter described. You're not going to see, a negative 150,000 gross profit and before you start to run things, because you're going to allocate it differently. But the bank accounts are going to match how you do that. It's just a way to make it easier to see the money, so that when I see money in a cost of goods account, I'm not thinking, oh, great, look how much I can go buy a new computer. And I can't think about it. That's not company money. That's product money and cost of service money.
Mm-hmm. And I have had conversations with several designers, and it's funny, and I'm sure each of you have as well. And what I've found is that we have tons of designers that come from a finance background. We've got, Sandra Funk, we've got Erica Ward. The names are escaping me right now, but that they come from a finance background. And what I have found over and over in just little anecdotal conversations is that the more inherently money savvy, finance savvy, I should say, a business owner is, whether it's from experience in a previous business or just that their DNA includes the money gene, the numbers gene. They literally, Kathleen Anderson is who I'm thinking of. Kathleen Anderson, she teaches our online bookkeeping 101. And one time her and I are having a conversation. She's like, I don't get the Profit First. What's the big deal? I said, well, Kathleen, you're looking at hundreds of thousands of dollars. Wouldn't it be great to know that this is products and services and this is, operating and this is she goes, well, I could see that when I look at it. I'm like, because you're a numbers person. The rest of us, right? So have you guys found that the more comfortable somebody is with numbers, the more they can look at the overall bank account and mentally just slice the pieces away. And then those of us that don't have that gene, having it separated, I can see would be easy, make it life easy for any person, Michele, to your point of Profit First. But anecdotally, have you found, each of you, the three of you, that this to sort of bear out in your conversations as well?
I have not.
Oh, interesting.
I have not. Only because now, if you are talking small numbers, $100,000 maybe.
No,
but when my clients are millions and millions, I have yet to find somebody who could look at that entire amount without a spreadsheet or something to back them up. They are not able to slice and dice. I've never seen one who could.
Okay, so I probably stated too much. All right, and I'm using Kathleen Anderson as our thing. She is way spreadsheet,
that's right.
QuickBooks lady. She's got
right.
it.
If you've got all that behind you, then
yes,
you might be able to look at that money. But Profit First is no different. It's just a system that allows you to look at the money faster versus keeping up with a spreadsheet to look at. It's all the same, really.
Yeah. Oh, and I love it. I'm not disputing it. It's just funny how I think that whatever. It was just something.
No, I understand what you're saying. No. I think you're right in that we all have to have something to help us understand our numbers, especially if you had one big bucket that had $1 million in it. It would be I think, very difficult without some type of supporting documentation to know what was a client retainer, what was a down payment for a product, what could be used to pay your employees. It would be very difficult. So whether it is a separating of bank accounts that gives you that ability to look quickly, or if it is a spreadsheet of some type, I still think some type of supporting documentation makes it easier. That was my point. Whether it's profit first or not is the supporting doc.
Right. 100% agree. Any opinion from you guys, Kim or Peter, on that?
Well, I do have a few clients who will, if we get open their accounting software, they'll say, before we are done with our meeting, can we just go over my spreadsheet too? And those are just people who have it all together, but also like spreadsheets as much as I do, and have their own, and they share their screen and they show their, their thinking on whether it's cash flow or the last, quarter, whatever. And you just can tell that they have a more, they like numbers,
right.
just as much as I do, I guess.
Interesting, right? Kim, any opinions on that and experiences with your clients?
Oh, yeah. I actually do a new client interview so that I make sure I translate it in their words, because it's really important not to use a bunch of terms and to cater how everyone's going to look at everything differently. That's why I never recommend software or anything, because everyone's been raised differently to look at things. Everyone's going to look at them differently. Even if my clients are savvy or not, I approach them all the same and just make sure they understand the numbers in general. And then we can get into the nitty gritty, which is, it's so important to understand how they interpret the data, not how you interpret it as a professional. And that's part of the learning curve for me. And I pride myself on just making sure they get what I'm saying. And sometimes we spend longer than we should, but at the end, the goal is to allow them to understand what they're looking at. And they don't have to know how it got there. I just want them to understand what it means.
Right. Understood. Got it. Love it. All right. And now another key component while we're in the weeds and getting a handle on our end of year is getting also a handle on what we expect our net income to be, right? This is the time where it's either, especially now, this is where I'm going to talk about partially knowing what I'm talking about, so correct me. But if we're an S Corp, for example, all the money in that account, whether it's labeled profit or operating or anything else, is going to flow through to us as on our personal tax thing. So now we have to start to look at how we mitigate that and what that actual projection is. This is me playing with fire right here. Okay. Understanding what I understand just enough to sound marginally informed. So, but am I on the right track though? Right?
On a tax perspective, yes, you are right. Unless you're a C corporation, your net income is going to flow to your personal return.
Right.
It's either going to be on it or it's going to flow to it through a K-1. And that's why if you have a tax accountant who already does projections throughout the year, or if you have a situation where you can get one done in the late fall, or at least by the end of the year, you want to make sure that they're doing an entire picture of all of the things that are on your personal tax return with the business information flowing, because that's the key that will give you the true accurate amount of what you might be looking at, as far as, do you need to make estimated payments? Do you have a spouse that has more withholding taken out than they need, and therefore you might be in a refund situation? That's the key, is to make sure that you have all of the information from the personal return.
Right. And here's how I know this. Not because I know what I'm doing, but because my mom, who is my bookkeeper, and our CPA, they literally at this time of the year, they're saying, and what's great is our CPA does WindowWorks, does my company, does Exciting Windows. They do all three companies. And so it's just what you said. Right about now, they're saying, where do all three companies sit? And what is this going to look like for Vin and Lou? And what are we doing here? And so, we're right knee deep into all of those analyzations and projections and trying to make some decisions. Okay. Now that's different for those of us in the audience that are LLCs and other things. Are there anything particular that we need to say to help them prepare this final quarter as far as what they project their net income to be and all that stuff?
You want to go, Peter, on that?
Well, I was just going to say there's a self-employment tax perspective that is an addition on top of the regular tax that you need to potentially be worried about based on what your profit's going to be.
Okay. And so this is the time of year that we're going to look for the next, all of October, all of November, all of December, and have that conversation with our spreadsheets and our, QuickBooks, whatever, and make that projection, right?
Yes, absolutely.
Okay.
Luann, this is Kim. I just want to add to what Peter's saying to kind of give them a view of what you should be expecting from your tax professional. Well, if you have Peter, you don't have to worry about anything. But if you are meeting with your tax professional September, October, you should be doing cash planning regardless of your entity through the end of the year. Because if your tax professional says something like spend the money because you're on a cash basis or gives you advice, you want to make sure you can still pay your bonuses and all your tax bills that come due in January and April. We don't want to wait till April to find out we owe a huge amount of money. And I always tell my clients to check in 3 times a year at the very least to do tax planning. You do April, which is a given, midsummer, which is I call a mid-year check-in, and then a September through October year-end planning meeting. And that is like the bare minimum. And I sit in on a lot of meetings between my client and the tax professional. It's pretty much as I like to call it a translator or a liaison. And I stop the CPA when I can hear the client get confused. And then when the CPAs or the tax professional sounds confused, I clear it up for him or her as well. It's really interesting because a lot of tax professionals don't know interior design. So that's where if you feel that's happening, that's completely normal, but you need to kind of you need to be able to communicate those numbers, especially preparing for year end.
Mm-hmm. And Michelle, how about you? Have you any things that from your experience with your clients that are red flags at this time, in this area with projecting what you expect your net income to be by the end of the year and all of that?
Yeah, I know Peter and I have a couple of joint clients, and I'm like Kimberly, we all sit in the meetings together. It just makes it easier. But I would say absolutely knowing this is what the income is going to be, looking at, I'm not a fan of just running out and spending money to spend money to bring that tax
I don't like
liability
that either,
down. I don't like it because to Kimberly's point, I've seen quite a few businesses that got that type of, it's almost like this fear of paying taxes, and nobody loves it, but it is part of, let's be honest, the more money we make, the more we're going to pay. So if you're paying 0 taxes ever, chances are you're not making very much money, right? And so, but knowing that and being okay with saying, how much can I pay? That cash is king. And so we not only have to have enough cash to pay ourselves, to pay for, like she said, retirement or bonuses or whatever, but not to start January where we feel like if we don't get one job, we're going to go under. Like we don't need to bring it down so low. And so really watching the cash. I know another thing that specifically Peter and I do with our joint clients, especially those that are S Corps, is we are constant, and I bet Kimberly does the same with those that she supports. We are getting towards the end and looking at how much they've taken in owner's distribution and what their salary looks like and how we need to balance that. I just met with my own personal accountant last week and my financial wealth advisor kind of guy the week before. And all of us were working together, even on my side, just to do that same work. How much is expected to come in between now and December? What does my husband's situation look like? Because they're all going to come into one big pot together. And I think that's super important. There's one set of getting your business ready. But as Peter alluded to, you got to also look at what the spouse is doing if you are filing together, because I've had years where my business didn't do as great as my husband's did, and I got kicked up into a tax bracket. And we've had years where I kicked him up into a different tax bracket. And so that it matters. It really matters.
Yeah, no, I know. That's what I said with us. That they're constantly pulling us both together and saying we need to figure this out between all three of these businesses here. One, because within the firm, one CPA handles WindowWorks and another CPA handles my business. They work together, but they're consistently saying, "I'm going to ask Frank. I'm going to ask Patty. Like we got to figure this out." So you do need to have somebody that has your back. That's really the other huge lesson in all of this is that part of it. Now, one of the things that we do want to do is we do want to start to look and try to strategically plan for the next year. Okay. And we want to set our goals for what we're going to earn financially, like as a firm and personally as the founder of the firm. And I would think that sort of ties in to that point of that cash on hand that like is going to be looking like it's sitting in the bank account to all of your points where you're saying make sure you just don't go out and buy a Range Rover when you have taxes that are going to be due in April or bonuses that are going to be due in January or February. And to your point, Michele, just not wanting to be chasing your tail in January and February when it at least in years past, could typically be slower months for the home industry, right? So the thing is, it seems to me that at this stage of the game in our business, we've got to be able to project our goals for next year because that's where we're going to tinge how much money we are going to leave in the account and maybe we are going to, like, for example, maybe we don't run out and buy a luxury item that we don't need just because some tax professional said empty your bank account. But maybe we knew in our business that maybe by the end of next year or maybe by the fall or whatever, it was time to upgrade 10 computers. Well, that could be a $20,000, $30,000 investment. So, or maybe we're talking about a small business owner. Maybe there's, $15,000 sitting there and we know we need a new $5,000 computer. So it does make some sense to make the purchases that we know we want to make anyway before the end of the year to chip away at that profit. But where does that analyzation come in? And how do you suggest that your clients make that determination on how much to spend and how much to leave so that they're not scared to death the first quarter of the new year?
Lynn, this is Kim. I am a big advocate of Excel spreadsheets and looking at cash projections. I started off in construction auditing, and that's where I learned that you can project from your jobs how much cash is coming in. So it's going to be not an exact calculation, but what you want to do is you want to take all your jobs, project what you think you're going to get, because we should have completion dates in mind, just roughly, and then what money you have to spend. And we're talking not only your expenses that you have to pay every month, we're talking liabilities, we're talking credit card payments, we're talking if you want to do bonus, if you have to give yourself a huge paycheck to pay your taxes, like all that is cash based. So that all needs to be planned out between now and December 31st, because if it doesn't get done by December 31st, then it's pretty much too late unless there's certain situations, and Peter can account for this, that you can get around that situation. But you need to do a cash flow projection to 3 to 6 months out. And that's just the first step. The second step is to do a budget for 22 and project what jobs you anticipate getting. The two of those together are, again, I do this in a year-end process with my clients, and I specifically make them do an hour of cash year-end planning on top of their regular meetings with me. And that's all we talk about is cash. And then another meeting just for a 22 budget, so that those two are two separate meetings, and they're approached as important topics in starting a new year. Does that make sense?
It does. And how about you guys? You guys, Michele or Peter, do you have things to add on how you counsel your clients to make these decisions the way Kim does?
Sure. I'll jump in and just say, so one of the big pushes in my coaching program is to create a 3 to 5 year strategic plan so that we're not looking at any one year in isolation. that way we can actually plan when do we want to upgrade our computers. We can make a plan for when some of these things are going to happen, and we're not caught as off guard. We also know the years that we want to build and the years we maybe want to hold, right? So to me, we have this overarching 3 to 5 year plan. Then we create financial plans that support the overall company plan. Those financial plans include, as Kim said, a cash plan. It includes, I like to have my clients create what we call an aggressive budget and then a conservative budget. And so we're constantly managing to the conservative on a day-to-day, but also looking to how do we get to that heck yeah budget, right? The one that we really, really would like to have, and what might that extra take? The other thing, again, that I think is important is either some type of profit first or some type of review that goes ahead along with that strategy and says, this is the percentages or the numbers that I need to meet. These are the KPIs that I must meet to be able to make this work. So creating any plan without some type of a metric to measure it is not always going to get us there, because it does us no good, right? And I bet Kim would agree with this. Creating that cash plan is only as good as we use that cash plan. So it's got to be these plans that we create aren't because we're bored, that we are creating them with our clients or assisting and helping them do that, because it literally changes the way you run your business. It gives you empirical data instead of a gut feeling, so that you know you're making decisions based on hard numbers, not I think or I hope. And that changes the confidence that we have to run our entire firm.
I have a question for you. For a design professional that is lesser experienced, right, and maybe hasn't had the benefit of working with financial people like the three of you, and has never set out a strategic plan for 3 to 5 years or even for 1 year. I know that you've heard this, Michele, before. I got to believe. Well, how can I know what I expect that I'm going to make next year if I don't know where my next client is coming from? How do you teach business owners to answer that question?
That's a really great question. The first thing I think is really taking a step back and asking, why am I not sure where I'm going to get my next client? Right? Because this is really, I teach in my Aim with Intent methodology, the 5 things. And one of the very first things is a solid foundation. And Luann, you've talked about it. I've talked about it. I bet Kim and Peter and everybody else has too. We have to know our why. Why are we doing what we do? Because that informs who we're going to serve and sell to. And if we know who we are, we know who we're serving and selling to, then we have to close that gap and create the marketing plan to find them. But we have to price it appropriately. So I usually will say a couple of things. Number one, take your current budget and let's go with budget. Take your current budget, mark everything up 10%, and use that as a starting point if you know nothing. So take your financials from this year, download them, mark everything up 10%, and start there. Just because it gives you a little bit of a nudge forward from where we are. Then tell me where you want to go. And this is where I start with the bottom-up financials. How much money do you need to bring into your home as spendable cash / salary? How much do you want to make in profit? How much does it cost you to run your business? And when you work your way back up, you can start to see, okay, so here's how much I actually need to sell with this financial strategy in place for me to be able to create the business I want to create. So it's really taking all these building blocks, pulling it apart and putting it back together. But you have to do that, even if it's on the back of a napkin. Like, I'm not talking fancy strategic plans here. I'm talking, I'm going to sell a package that is not under $5,000, and here's everything you're going to get in it, and here's who I'm going to sell it to, and I'm going to go reach them on Instagram or Pinterest or Facebook or at, some event or whatever, and then just it's the day-to-day that moves us forward in any of these plans. It's not always the big moment. It's every single day being committed to the goal that we've set out to achieve.
Love it.
Does that make sense?
It does. And the thing is, if you're listening and you haven't done this before and you doubt it, I get it. There is a part, if you've never done it before, that thinks it's wishful thinking, that it's like, well, just because I had, 5 projects last year and my total, gross revenue was $60,000, just because I say I'm going to add 10% doesn't mean it's going to happen. But what I have learned over and over and over again in our own business in WindowWorks, in the businesses and exciting windows that we counsel and teach in the window treatment industry, in the designers that I've worked with and the chairman of the board, when you put it down on paper, it happens. It does. It's when you don't put your back against the wall. I love what you said, Michele. Figure out, what do you want to earn this year? Put it down. What is it going to cost? What's your cost to be open? The VinMan's cost to be open. Do you have a studio? Do you have a car? Do you have insurance? What does it cost to be open? Figure it all out. And then what is your ladder of services, our Nancy G ladder of services? How do you make money? And what combination of projects do you need to bring in now to make the money that you put in the other wish pile, right? Like quote unquote wish pile, but it's not wish pile. We're not doing this for a hobby. And can each of you say the same thing? Michele just said it. Do you, Peter and Kim, also find that the professionals that you work with that put, even like at WindowWorks, we put down the number we have to reach, and then like Michele said, we put the aggressive number. And if we're really feeling randy, let's go for this number. And it's crazy. We always hit the bigger number every year. It's insane because it just becomes the deciding factor in every day, right? Well, and I'm going to put this caveat to it. You reach the number if you look at the number every day and every week. You don't reach the number if you write it down in October of 2021 and you don't look at it until October of 2022, because then it is just a pipe dream. But when you work your business and you're like, it's Monday, and we just did it today. We had an exciting Windows conference all last week. So I had 3 salespeople sitting at the conference, me and Vinny at the conference from Monday to Thursday. So October 1st was the previous Saturday. Now we got Monday, Tuesday, Wednesday, Thursday. They're all at the conference. We were at our sales meeting today and we're like, we're at 65,000. Whoa. That is, we're on projection for $202,000 in the month of October, but yet our projection is $295,000. I mean, not our projection, our goal number. And so we're like, okay, we were all at a conference last week. What are we doing? And it's ba-bum, ba-bum, ba-bum. But if we didn't do that and we just put 295 as a goal number sometime last year back in October, and we didn't address it every single day, we wouldn't hit that number. But they're all dialing for dollars today. They're like, whoa, we're only at 65. It's the 11th of the month. We got to get going, right? I mean, do you each find this with your clients as well?
I want to say one more thing, and then I'll hush and let Peter and Kim jump in. I think that if we don't have those numbers and have a commitment, again, the commitment means we're not writing the number, like you said, we're strategizing to actually make it happen. But if we don't share that with our bookkeeper, and if we don't share that with our tax preparer, like our Kim and our Peter, it's unfair to them, because they now might be giving us suggestions on things that are not in alignment with the long term, where we want to go and what we want to do. How unfair. It's like we're asking them to guide us, but we're tying their hands. And I see that all the time. If they had said to Kim and Peter, this is our plan, we want this next year, we want this in 2 years, then they can help them achieve that goal. But if they hold it back and don't look at them as part of that financial team and prep, then, they could say, go buy that car, go spend this money, without thinking of what was going to happen. So Kim started off, and I just really want to put a big exclamation behind what she said. She said, if you cannot communicate with those that are supporting you financially, you need to work at it. And if it's not possible, perhaps change your team members. And that's why this is important. They are supposed to be part of the team that moves your business where you have decided it wants to go and where you want to take it. And they would totally link arms with you when you have the right people to do that.
I love it. I love it. That's just really great advice. And also because, as I mentioned a few moments ago, here we've got Patty and Frank strategizing. But if we don't share with them the big bodacious numbers that we still plan to hit this year, they're making their strategies based on, whatever, right? So, okay. Love it, love it, love it. All right. Now, we have a couple of things that we should touch on before we wrap up. And I know, Peter, you wanted to make sure you had a little conversation about the PPP, and you wanted to, I love this one, are we aware of tax deferment options if we're in a very profitable year? So do you want to talk to us a little bit about the PPP first and see if we're all up to speed there?
Sure, yeah. So the SBA has finally made it very easy to apply for forgiveness and get some sort of answer relatively quickly. So if you haven't, I just wanted to say that if you haven't done that yet, um, you probably, once your covered period is over, if you're eligible and you've spent all of the funds that you've got on payroll, just get it done because um, like I said, it's easy and it's something that you can get done now, get out of the way, and you don't have to worry about any deadlines because you're just going to get it done now. The other thing I just wanted to say is there was a lot of relief with COVID-19 that came out, whether it was the PPP loans or other grant options that people have gotten based on what you received. Anything that has been forgiven or will be forgiven that you don't have to pay back. You just want to make sure that everyone, and what I mean by everyone is your tax preparer, your bookkeeper, and anybody else in your financial team just has all of the information. You want to keep all of that backup and forward it to your tax preparer if you haven't already. You can do it like right now when you're listening. That would be best because
don't forget
that just because of that backup. I've seen already looking at P&Ls, it's kind of like other income, blah, this number, and it could be the PPP loan, a grant, something else like a forgiven, and your tax preparer is going to know what's not taxable and what's taxable based on what you received, and that's going to be very important as well when you're talking about projections and, of course, when you're preparing your tax returns.
I love it. It's the same as Michele was saying. Keep them in the loop. So if your tax preparer knows that, has the documentation from you that you were given an X amount of PPP loan, you were forgiven it, and then there's this rando number on the P&L or the balance sheet, wherever it is, they could be like, oh, that happens to be that exact same number. I know what that is what you're saying.
Exactly. Like if it's in sales, because someone just put in sales, and I don't ask the question, then I think you made more money than you did.
Right.
And then you're paying more in taxes and an estimated payment that maybe you had to. So.
And so what you're also, I'm now just going by our business. So the PPP loan, most of that money came out a year ago. Were people still getting it into this year?
There was a second go around based on certain businesses if you met certain criteria. So there was some businesses that received it in 2021 that now their covered period is over and they can apply for forgiveness as well for that second one because the rules are the same for both.
And this is literally one of the dumbest things that we can do as business owners is to not sit down and do these forms for this forgiveness. I mean, that's just, and I did the forms for WindowWorks. It was mind-boggling. It was absolutely brutal doing it, and I hated doing it. And the thing is, you're all like, well, why did you do it instead of Vinny? Because Vinny doesn't really even know how to download something on a computer and get it from another place and then attach it as an attachment. Like, it was easier for me to do all of the actual technical of what the computer do, but then he's got to find the documents and he's got to get that was a reality TV show that was about 5 hours on a Saturday, and I tell you, we could have got an Emmy for that. It was like but you got to do it. It's like it's like a paycheck for the day, except that it's not one day's worth of pay, right?
Thankfully they've finally made it, I'm going to say, about as easy as they're going to make it. How about that? Because it's, even for an accountant like me, if I never see an application again, I'll be very happy.
Oh gosh. Well, that really was a funny afternoon, but anyway, we're still married. All right. And then talk to us about tax deferment options if you are going to close out at a very profitable year. What's something we need to know about that?
Yeah, just the last thing that I wanted to make sure that I said was that I do have some clients, and there's a lot of designers with everyone being at home. They're having years that, we talked about setting goals. They're having years that they never even could have imagined based on their goals, and their profits are higher than we all, couldn't have imagined. So I just wanted to say that there are, if you talk to your tax accountant, maybe if you have a financial planner, there are different tax deferments besides just putting money to a 401k that you can kind of take advantage of. I would say when you're hearing this, kind of contact that team as fast as possible, because based on different things, there's rules on when you apply versus when you have to fund it, and getting that stuff. And some of them you don't have to actually fund the account until 2022, and you still get the tax break for 2021. But just a couple of things to think about. If you have a 401k already set up, you want to make sure you're maxing that. If you have a SEP, it's called, and that makes sense, or a simple IRA based on what that is. And then to go further, some of my clients are now looking into profit sharing plans this year because they have so much money that they want to make sure that they're getting the greatest tax benefit from. So a lot of these options that we're talking about, if you have full-time employees or if you have employees that work a certain amount of hours, they may be eligible too. And that's great. If you have a great team, you're getting a tax benefit, and you're also giving your employees who hopefully have worked extra hard this year, if you're having those numbers, you're giving them an added benefit besides the benefits that you already give. And so these plans, they try to maximize the amount of money you're putting in. They want to maximize the max benefit to the owners of the company. So just a couple of things to kind of think about, and reach out to a financial team or a financial benefit company that can kind of work with your tax accountant and figure out how much you can contribute to these plans, when they need to get funded, and how much you're going to save in taxes by doing it.
Okay, great advice. All righty. So, any final last things that goes through your mind as we close out, and we want to say, don't forget this, or please think about that? Kim, anything on your mind that you want to add?
Just to add to what Michele was talking about doing your budgets, you can get it down to the exact staffing structure you want for the next 6 months, year to 2 to 5 years. I do my budgets based off staffing, and then we figure out on their purchasing what that'll produce, because I have firms that just do nothing but design work, so it's hard to project the markup or the purchasing amounts for each client, but you can do it for the staff and just track your time, because that's where the budget information comes from. And everyone that's hearing this is probably rolling their eyes right now, because I talk forever about tracking your time, but it literally is the cost center of doing a well-profitable, well-produced interior design firm. I have not met one interior design firm that's just happy as a clam with their cash and profitability if they weren't tracking their time. So I will, not that I want to get in the ring with anyone, but I can preach till the cows come home. My clients are sick of hearing me say it, and I teach it in my classes. You can't do anything without tracking your time. So that's my last word.
I love it.
That. Yeah.
I love it. I love it. Michele, how about you?
Yeah, I second that, Kimberly. Our time is a currency that's spent on our calendar. Our money is a currency that's spent in our bank accounts. Believe it or not, time is the only currency that we cannot get back. Right? So it is super, super important. I don't care if you're flat fee, no fee, all the fee, hourly fee. I don't care. We need to know the time, because that tells us capacity. That tells us, to Kimberly's point, when to hire, who to hire, how to hire. So totally. I also just want to mention, Luann, a resource on my podcast for strategic planning, because I know a lot of people aren't necessarily at a point where maybe they could go hire a coach to help them build that strategic plan. And so starting in the fall of 2020, is that right? Yeah, last year at the end. So I think it was around November, December of 2020 on my Profit is the Choice podcast. I started talking on all my solos. I do 2 solos a month, how to build a strategic plan. And I've talked about that for the last year on my solos.
Whoa.
I started with how to end the year, what to do, and every single thing on how to build that plan. And so if anybody wants an absolute free resource, you can go to Profit is a Choice, start at the fall of 2020 and go through 2021, and you should have all of the pieces and parts to build a strategic plan.
Get ready for some downloads, lady.
Well, I hope so, only because it's so helpful. And just imagine if all interior design firms or all listeners did all of those things, right? They created a plan. They shared that plan with Kimberly and Peter, in those positions. Now, Kimberly and Peter on the day-to-day and month-to-month can help them attain that. I mean, just imagine how much happier and how much more ease and fun we would have when we know what we're working towards.
I love it. I love it. And I know, Peter, you talked about the PPP and different things as a last thing. Is there any final thing that you wanted to share before I let you go?
Just to make sure that you're communicating with your tax preparer. And if they're not communicating with you, you need to find one that will.
Yeah, definitely. I love it. I love it. Well, all of your resources for each of these amazing professionals, their websites, all of the things will be in the show notes for this episode. Of course, these three are all co-authors in the 2 Power Talk Friday expert books. So in addition to the free podcast, in addition to all the episodes they've been on this podcast, the book is, not a high entry price where you can get some advice and some wisdom from them as well. And all the notes will be in the show notes, how to reach. I listen, you guys know me. Somebody doesn't come back to my show multiple times unless I believe in them. And I know that each of you from personal clients that you've had come back to me and report to me, game changer working with each of you in their businesses. And so I 100% support all of you and what you do. And I'm grateful that you come here and you share it with me and my audience. So thanks so much for joining me today, guys.
Thanks, Luann.
Thanks. It was good to talk to everyone again.
Yeah, thanks, Luann. Have a good week.
All right. Thanks a lot. I'll see you guys soon. I really, 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 really love that Michele started us off by recommending that we give ourselves space and time to focus on our financials, right? It's a crucial part of our business success, and it needs and requires our focus. She also knows us very well and understands that we can get behind. She reminds us to start our focus session with a positive mindset. We shouldn't be beating ourselves up if we haven't been as attentive to our dollars and cents as we know we should have been, right? Not many of us are eager to sit down and focus on the finances. Most of us would rather be out just doing the everything else, right? That makes our business fun and exciting, right? But meeting with our financial team and getting into the nitty-gritty about expense allocation, depreciation, and SEP funding and all the things, you got to do it. Michele knows this. Peter knows this. Kim knows this. They know our expertise lies in other areas. They respect that, but they also know that for our expertise to create a lasting business, we have to pay attention to our financial picture and enlist the help to fill in our knowledge in these gaps, right? So I have to say, you get a high five for listening today. Many will have seen this title and skip it. I know it. But talking about money and the management of it can be a huge stressor. So I know how tempting it is to put your head in the sand and pretend it's okay, but you can't do it. All right. Now, our money gurus said the first thing they want us to do is clean up our balance sheet. Cleaning up our balance sheet simply means making the balance sheet an actual snapshot of where your business is today. What are you looking for? Well, we need to properly reconcile our accounts. All assets and liabilities need a name and need to be tucked into the right space. Everything from deposits to payments to outstanding invoices needs to be accounted for. Why is this a year-end task? Well, actually, it shouldn't be, right? It should be a regularly scheduled task. But like Michele said, she hasn't encountered many clients who have accurate balance sheets. So they are recommending, if you have not done it all year, that you do it as we enter into the year end, okay? Another point our money trio brought up was accounting for pending installations. Did you collect money for the job but haven't completed all the purchasing yet? These take a review, right? You need to review all your in-house projects. And the other point you want to pay attention to is income projection. Are you an S Corp? Does your business income flow into your personal? Are you filing jointly? Does the combined income push you into a higher tax bracket? What will your self-employment tax look like? How much cash do you need to have for bonuses and expenses? All right. And tax deferments. What about these? Are there smart ways to handle your retirement and profit sharing plans? I know if your head is spinning, I get it. I'm right there with you. This is not my wheelhouse either. All right. But I have to say that is when I call in my experts and I sit down with them for focused time. And I really, really insist that they help me figure out anything I don't understand and help me figure out a smart plan for whatever it is that I'm looking at. All right. This is what these accounting professionals do. It's their job and they're good at it. Michele, Peter, and Kim enjoy working with clients like us, right? They like working with creatives. They like to help us make smart choices, to help us keep us on track, and they like to make it so that the balance sheets, the P&Ls, and the taxes aren't those scary monsters in the closet. All right? And just like your dream team of finance pros, you need your dream team for project management, and that's where My Doma Studio comes in. My Doma Studio is the place to organize your projects, packages, and invoices. As a listener of the show, you receive 20% off for the first 3 months of your My Doma Studio subscription. Now is the time to organize your finances and your back-end operations. Find out more at mydomastudio.com/a well-designed business. See exactly how it works by booking a live demo or simply by having them email you a demo video. What could be easier than that? All right, so planning for the new year. Does it have to wait for January 1? No. They all said no. Start now. They're working with their clients now to create a plan for next year and beyond. And they suggest creating and writing down your goals, a budget, and the plan to make it happen. There was a lot of good stuff in this conversation. You might want to go back and check the timestamps in the show notes and re-listen to the sections that you might need some clarity on. And by the way, have you ever looked at my show notes? Did you know that we timestamp important parts of the conversation so you can easily go back and find the info you need? I suggest you check it out. All right. I also highly encourage you to go back and listen to the full episodes of each of these 3 dynamos. Each one is packed with advice and encouragement. And if you need some more free help, check out Michele's podcast, Profit is a Choice. If you need a fantastic CPA or a fractional CFO, reach out to Peter and Kim. And don't forget, both Peter and Kim are faculty members for Luann University, sharing their expertise in sessions running every spring and every fall. The links are also in the show notes. The important thing is to take action. You can manage your money. You're a smart lady or a smart guy. You can be smart about your money. You can get to a place where money talk doesn't intimidate you. All you have to do is ask for help. Find the trusted professionals who respect your expertise and are willing to help you with their expertise. Sound like a plan? Well, I hope you do it, and I hope you decide to be excellent. Thank you so much for joining me again today. This podcast is a production of WindowWorks, your resource for custom window treatments and awnings. To learn how we can help you on your next interior design project, go to www.windowworks-nj.com. And if you're interested in working with me on your business, either through masterminds or one-on-one coaching, or you want to know how to get my book, The Making of a Well-Designed Business, or you just want to know what's going on in the podcast land and where I'm going to be, all of that is found at luannigara.com. Thank you so much. Have an excellent day.